Welcome back, and you're watching Market Fatafat on ET Now. This is a show where we get you all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals, now we have Kunal Shah joining in with us. Kunal, a very good afternoon to you, and thank you so much for joining in with us on Market Fatafat. Your first stock that you picked out for us, Kunal, is Granules. When you look at Granules in terms of the stock move, last 6 months seems like a bit of a subdued move, finally picking up pace as of now, seems like, at least today, in terms of the performance. On the charts, what is your view coming in for Granules?
Good afternoon. I think the entire pharma space has been doing quite well since the last 1 month or so, and we have seen a very good rally in the large pharma space. Now it's the time for the mid cap to outperform. So that's where we are seeing buying interest coming in from Granules from the lower levels. Now the stock on the technical chart has formed a very strong base around that 285 290 zone over here, and I think bulls are very active from those levels. So from the current levels, it looks at a very good risk to reward ratio as well. One can initiate long positions from the current levels. It's almost on the verge of a falling trend line breakout as well. 295 296 is currently where the stock is trading. 285 is now a very strong support for the stock. I'm expecting higher levels of at least 320 to 330 on the upside.
All right, moving on, let's talk about IndusInd Bank then, Lisa, and why is this particular stock on your radar today?
Well, yes, IndusInd is in focus because Macquarie has released a note on IndusInd. Well, they say that IndusInd has reiterated its focus on delivering ROA return of around 2%, and this will be over the longer term. The credit cost for FY24 is likely to fall from 160 bips seen in FY23 to around 110 to 130 bips for FY24, and they're also confident of increasing the net interest margin, and this will be from the current rate of 4.2 to 4.3%, and in FY24 they're expecting around 4.4% net interest margin, and this will be on the back of low deposit cost. Their objective is to strengthen their balance sheet by making a more contingent provision. So on the back of this, Macquarie has given an outperform rating on IndusInd at a target price of 1,510, and they say that the stock is trading at 1.4 times on the FY25 price to book value, which is cheap and is at a 40% discount to its industry peers. So, well, on the back of the brokerage note, IndusInd is in focus today.
An eye out on IndusInd, but we also spoke with Shah of Helios, and he also likes the banking space, believes that there could be a good performance coming in banks. But why is that so? Let's go cross and listen in.
We were pleasantly surprised by the way credit started moving, and actually that is what is needed. Please, let's remember that there have been 3 cycles of private capex which have been postponed. Initially for the elections, then came demon, and then obviously came COVID. So you're seeing this 3 cycles working out. If consumption continues the way it is, I think these cycles will work out perfectly for the banks per se, because they're not only going to fund the consumption, but they're also going to fund the capex which is needed to take care of this consumption growth. So banks will, in fact, the NIMs, we also felt that they've peaked out as such. And frankly, I mean, the March numbers were a pleasant surprise because they didn't peak out. In fact, some of the banks reported on further expansion in NIMs per se. But our feel is that they more or less peaked out. Maybe there will be some inversion there as such. But the fact is that if credit growth picks up, then we are home and dry, because that's where there's the other pillar of growth for the banks as such. And if that kicks in, I think we'll be more or less taken care of. And in fact, just remember that when actual businesses grow, and obviously credit growth is an intrinsic part of the business for these guys, then that's when the re-rating happens as such. So I don't think we have a concern in the banks front.
All right, before we take on to the next stock, and which Vinny will be discussing, that's Indigo, let's talk about Z Entertainment, because that's a company, or that stock will be in focus. Remember, SAT was hearing Puneet Goenka and Subhash Chandra's appeal against the SEBI order, and the latest that we are picking up is the fact that SAT has reserved order in Puneet Goenka and Subhash Chandra's appeal against SEBI. So we have to wait and watch out. The fact that they've said they reserved the order, which means that we are likely to hear from them very soon on that particular front. So for now, what we've got is the fact that SAT has reserved the order in Puneet Goenka and Subhash Chandra's appeal against SEBI. So a crucial one to watch out for.
Absolutely, a crucial one to watch out for. And given that there's so much buzz happening around Z as well, you know, in the recent times, a lot of things and a lot of factors coming into play. So keeping an eye out on Z Entertainment. But moving on to the next one, and that is Indigo that we're going to talk about. Now, Kotak has added Interglobe Aviation to their large cap model portfolio, and they believe that Indigo could do well going forward. The 150 basis point to their recommendation is what it adds to the portfolio for Kotak. And in terms of that, Kotak is offering a 22% upside, is what Kotak is saying, and they've given a price of 3,000 rupees. So yes, 22% upside is what they're expecting. Currently, when you look at the stock, trading at around 13 times FY24 and FY25 EPS, and although they would require some clarity in terms of the volatility, in terms of earnings, how is that going to be? But Indigo is surely one of those beneficiaries we have spoken about in terms of the domestic market, in terms of gains, because Go Air operations were a bit subdued, and actually there were none of those operations which are taking place. So because of that, Indigo was a beneficiary in terms of the domestic setup. Global prices, crude prices, that had seen a correction. That are the factors are positive, and that is why they've added it to their model portfolio. As of now, Indigo is up and away in trade, 2.5% uptick.
All right, let's shift focus into IIFL Securities, also IIFL, the entire pack. Let's watch out for those counters. IIFL Securities is one point in time saw an uptick of approximately 9%. You saw the spike, as you can see it on your screen, more since April 25th, and this is after the SAT stayed an order by SEBI that restricted the stockbroker from taking on new clients for at least 2 years. Back of that, you can see IIFL Securities stock is gaining for a third consecutive session. Remember that June 19th, SEBI had barred IIFL Securities from taking new clients for a period of 2 years. And for now, you have a SAT interim order that has come in, and they have actually stayed the SEBI order. So on back of that, you have IIFL Securities that is buzzing in trade. Take a look at 5paisa.com as well as IIFL Finance. Wealth, I beg your pardon. All of them are buzzing.
Okay, surely keeping an eye out on those buzzers today. Moving on to another one, and I'm just looking at it, Ace Construction, Action Construction, or Ace as you know it as. And Kunal, this one, you know, look at the charts for the 6 months, almost 65% return. Last 1 year, 131% return. So strong returns already there for this company. How much more upside would you actually peg in for the company now, stock?
See, definitely, as you mentioned, the stock has been a massive outperformer, but I think the last leg of rally is still left, which I am expecting the stock to go at least towards the levels of 550, 560 kind of a range. Currently, it is trading at 496, so you can expect more 10% upside from the current levels. Now, the stock had recently witnessed some correction in the last 1 week or so. Post that, in yesterday's trading session, we witnessed a piercing candle on the candlestick pattern, which is a bullish reversal structure. Plus, we got a follow-up move in today's trading session where the stock is up by 5%. So we can expect this out move to continue. 550, 560 is what I'm expecting on the upside.
All right, that is the word coming in on ACE. But Ashesha, City Union Bank, why is this particular counter in the spotlight in today's trading session?
Well, yes, the bank has informed the exchanges about their fundraising plans. Yesterday, post-market hours, they said that they've approved QIP to the tune of 500 crores. And they also said that they had sought shareholders' approval for raising capital through QIP in the last AGM as well, but they did not utilize that particular limit. This time again in the AGM, they are seeking shareholders' approval for fundraising to the tune of 500 crores, which will be done via QIP. So on the back of this news that has come in, the stock is in focus today. It is sitting with gains of nearly 1% as we speak.
Okay, let's move on to the next one, and the next stock on stock number 26 is Naveen Fluorine. Now, Lisa, why is this one in focus, and what is the news flow here today? Because Naveen Fluorine surely is one that has been a bit of a subduedness in trade that what we're seeing as of now. But what is the news flow?
Yes, Naveen Fluorine, they have made an announcement that the board will be meeting on 30th June, and this is to discuss a proposal for fundraising, and the fundraise will be via issuance of equity shares or private placement basis. They have not mentioned the quantum of funds or the purpose for it, but mainly it can be for capex, because in their recent con call, the company said that they will be announcing a capex of around 450 crore, and this will be for setting a hydrochloric plant at Dahej, and also the new capex addition, it will be used for addressing rising demand in pharmaceuticals, EV battery, and also solar space. So, well, yes, the stock was up in early morning trade. It was up around 1%, but since then it has cooled off.
moving on, let's talk about Mahindra and Mahindra, Kunal, and this one has been an outperformer in yesterday's trading session. In fact, we had one of the analysts yesterday also point out that Mahindra will actually try to see an uptick after this consolidatory phase that it has been seeing for over the last 6 months. Are you also of the similar view?
So definitely, if we talk about the auto as an entire space, it has been an outperformer in the last 2 to 3 months. Specifically, if I talk about the leading pack from the auto pack is M&M, where we are seeing some strong momentum carrying forward. So 1400 was an immediate hurdle for the stock. We have taken out that level in today's trading session, and if today we close above that 1400 mark, I'm expecting the stock to go towards at least 1600 levels on the upside. So even from the current levels, at least you can see a rally 10% in the very short term. M&M in the last at least 5 to 6 months has done nothing. It was just consolidating. Now is the time when the auto rally will again start. M&M will be the leader in this auto rally.
Okay, that is M&M, surely keeping an eye out on that one. Let's move on and talk about Sonata Software. Now, this stock is in focus today. Why? Because there's an order win that actually came in, that they won an order from TUI Group. Mainly, this is to build and manage digital hubs in India for the TUI Group. It's a strategic collaboration which will give them to build the cutting-edge technology for digital solutions, and that will enhance the customer experience or operational efficiencies as well for both the companies. So, keeping an eye on this one. As of now, you can see the stock has given up those morning gains that we saw when the announcement was made, but as of now trading with gains of 0.4%.
All right, moving on then. Kunal, let's talk about HDFC. There is a lot of complaint that HDFC Bank not participating in the market up move. Yesterday, if you look at these counters, they were the ones who actually held back the gains coming in for the benchmark indices. But in your view, do you think HDFC will now stage an outperformance, will actually lead the market higher along with the HDFC Bank?
Come back for the HDFC twins to outperform. We have seen a massive underperformance from both the counters over here. Now, if the market has to trend higher from the current levels, it will be the large caps such as HDFC Twins, Reliance, which will come into the participation. So HDFC Limited specifically is looking very good. Everybody are waiting for the merger date announcement. Once that is announced, again we'll see that momentum building up, and we expect that merger date to come in the next quarter as well. So already the momentum has started to build up.
We are getting a breaking news. While you are talking about HDFC Limited, we've got a breaking news that will be flashing on the bottom of the screen very shortly. The fact that Deepak Parekh is saying that the effective date for the HDFC and HDFC Bank merger will be July 1st. Remember, what we are also picking up is that HDFC as well as HDFC Bank boards will be meeting on June 30th after market hours, and the merger has now received all the necessary regulatory approvals. So this is a very big news that we are getting right now. HDFC Limited shares to start trading as HDFC Bank shares from July 13th onwards. So that's the breaking news right now. The effective date of HDFC Bank merger is July 1st. And the crucial point is that HDFC Limited shares will start trading as HDFC Bank shares from July 13th. This is something that the markets were really anticipating, were waiting for that big date. And let's cut across to Deepak Parekh to hear more on that.
Start selling mortgages, which we're not doing prior to this. And so the reach to individuals across urban, semi-urban areas where the branches, HDFC Bank branches are, will start marketing and dispersing mortgage loans. So we expect the growth to increase as there is a huge demand. We have seen our demand go up.
I think also very important for everyone to understand that the bank has something like 70 million customers. And out of the 70 million customers, just about 2% of them have taken housing loans from HDFC. Just 2%. And about 5% have taken loans from other banks. So look at the ability in terms of being able to cross-sell housing loans to this massive customer base who have not taken housing loans. Also, the average age of a first-time home buyer in India is about 37, 38 years. And if you look at the demographic trend, 65% of India's population is below 35 years. So in the coming years, there are going to be that many more people who will get to an age where they will necessarily have to buy a house. So to my mind, there will be a structural increase in the demand for housing in the years to come. Unfortunately, because of the closed period, we can't get into too much details on numbers,
and
but this is just a broad sense. 2%. 2% have taken housing loans from HDFC.
Sorry? Wait, let's finish this then. Keki doesn't have to be here then, no? You want to go? He's got some visitors, so I thought let Keki just talk about what he can talk.
On preserving the, preserving the legacy and memory of Parekh, but there's also the culture of HDFC. It's been associated with customer service, personalized service for the fixed deposit holders. So how do you preserve that?
No, we hope that the bank follows the same culture. See, we had a small group of 3,000 to 4,000 people only, 4,000 max. The bank has in lakhs. So it is, the cultures have to be different. But we hope the bank, we have been talking to the bank and the bank realizes, the bank directors realizes, the senior management realizes that customer centricity is the key thing. And they have to improve service and they have to be like, it should have the culture inculcated in the bank employees. Our people will try, but they are aware of the culture. But we are a smaller organization, it's easier to have that.
Mr. Parekh, you've been at HDFC since day zero. So what would you say is your defining moment that you've been? Is it when you lent your first loan? Is it when
So the defining moment was when we gave the first loan. We all got so excited. We took his photograph, we took his house photograph, we called his wife to our office. We put him on the cover of the first annual report, our first borrower, Mr. Remy Dios, whose photo is there also in the Legacy Center.
What are you saying about culture? I mean, I'd love to rehear that, Mr. Parekh.
About?
Culture.
Culture between the two institutions as they said.
No, you see, the culture has to be different. When you buy a house, it's the biggest acquisition cost investment by a family. They run from pillar to post to meet the balance requirement apart from the loan. Then they are not sure about buy a house with a particular builder, what is the price, what is the possibility that they may not get it. So, it's such a complex subject that our frontline staff has to spend much more time with the customers. And it's an emotional thing for the customer. We have to listen to sob stories of each individual family that how will I get the balance money? Can I trust builder A, builder C? What is your experience been? Then they want to know the price. If other borrowers have come in the same building, at what price have you sold? They need all that information. Now, a bank that does not do housing, the culture has to be different. They do auto loans and personal loans and unsecured loans. They are short term. They are 12 to 18 months duration. We are lending for 15 years. So one of the biggest strengths I see in the merger with the bank is that.
Okay, so absolutely big breaking news coming in over there where the effective date of the merger is going to be 1st of July for HDFC Bank, but the shares will be traded from 13th of July for this. So that is one to watch out for. But let's go across to Harsh, who's standing by to give us more details on this. Harsh, take it away.
Well, yes, much awaited. The HDFC Bank merger now going to be effective 13 July is what we've been told. Of course, the exchange ratio was well known. 25 shares of HDFC would warrant a shareholder to 42 shares of HDFC Bank. So 1.68:1 is the ratio where each share of HDFC Limited will warrant a shareholder 1.68 shares of HDFC Bank. Now, largely with regard to the regulatory approvals, what we've been told is all of the regulatory approvals have now come. Both boards of both banks will meet on the 30th of June end of day, or rather HDFC Limited as well as HDFC Bank boards will meet 30th June end of day, and that will be the last and final meeting of the HDFC Limited Board of Directors. Of course, 1st July is the effective date for the merger. So 30th June, we will see the Q1 results for both companies. And of course, we will also see effective 13th July, the shares of HDFC Limited being delisted from the exchanges and HDFC Limited shareholders to receive shares of HDFC Bank.
Okay, 13th July, Cheryl, that's an important date that we are keeping an eye out on. That's when the shareholders will receive their shares also of the bank as well. So that is the one to watch out for. Look at both the stocks, Cheryl. You know, they started going up when we were talking, and when the news came, it was 1.5% around both the stocks. As of now, surely trading with gains of more than 2%.
Exactly. The street was really anticipating this particular date. Now that the merger has received all the approvals, regulatory approvals, you have Deepak Parekh himself actually come out and actually give that merger date for you, saying that July 1st is when the merger will be effective. HDFC Bank boards will be meeting on June 30th post-market hours. And also you have HDFC Limited shares will start trading as HDFC Bank shares on July 13th. So that's the big breaking news. The stocks have actually picked up pace. It's at the day's highest point. And remember, this is one of the biggest trigger coming in for both of these counters.
Absolutely, Cheryl. Surely that is the one that we are watching out for in trade as well. But I think let's move on to the next one. And I think you're going to talk to us about Piramal Enterprises.
Absolutely. Another stock that has been actually a buzz off late is Piramal Enterprises. Remember the fact that it also had sold its stake in Shriram Finance, and on that particular day also you saw a sharp rally in Piramal Enterprises. Today as well, the stock is perked up in trade, 2.3% uptick coming in for that particular counter. Jefferies has come out with a note on Piramal Enterprises. They're saying the loan growth will be steady and the credit cost should stabilize, but high OPEX intensity should weigh on the returns in the near term. They're expecting loans to grow at 15% compound annual growth rate over FY23 and FY26. They're saying reduction of stress book and normalization of provision could lift the valuation multiples for Piramal Enterprises. Therefore, they are actually maintaining their buy stance, but they've gone ahead and upgraded the target price. They've raised the target price from 985 rupees per share to 1025 rupees per share. So yes, a good jump that they're expecting in the stock price, and Piramal Enterprises at the day's highest point for you right now.
Absolutely. Let's move on and talk about the next one, and that is DLF, and this one is buzzing in trade today, Kunal. What is your view on the charts for this one? Surely has given some good returns in the last 1 month as well.
Yeah, I think if we talk about the entire real estate space, I think it is going to do very well in the near term. We have seen a series of interest rate hikes, and now we are at the terminal rate. So from the next RBI policy, we will also see a rate cut happening over here, which will again boost the real estate sector. The sector has already given us a breakout on a technical chart perspective, and from that, DLF could be a very big leader over here. It has been already been a massive outperformer. Currently trading at 483, 484 zone. One can initiate long positions from the current level. The technical chart structure looks extremely bullish to me. 450 is a very strong support for the stock on the downside. I am expecting levels of 545 to 560 on the upside.
Alright, so that's the take coming in on DLF. Let's stay with the real estate space then. Ashesha, Anant Raj, why is this one in the spotlight today then?
Yes, this counter is in focus on the back of a block deal that took place today morning. In fact, the stock hit 52-week high today, and it is sitting with gains of over 3.5%. About 11.8 lakh shares changed hands via block deal today, and that is the reason the stock is buzzing in trade today.
Okay, and that was stock number 32, but that was the last stock for today, viewers. On that note, it's an end to this edition of Market Fatafat. Thank you so much, Kunal, Aliza, Ashesha, for joining us on the show. And it's a goodbye from Shah, myself, as well as the team who put this show together.